Welcome to Face the State. I'm Ariana Bennett. Thank you for joining us. This year, the IRS expects to receive about 150 million individual tax returns. Citizens have until April 15th to get these done, whether you choose to use a tax preparer or do it yourself. But this year, with some new provisions from the Affordable Care Act, the process could work a little differently for many taxpayers. Dina Weiberg from H&R Block is here to tell us about that. Dina, thank you for coming on the show.
No problem. Thank you for having me.
Okay, so starting with the basics, what do people need to have ready in order to file their taxes?
Well, they need to have their W-2s. If they are receiving insurance from a marketplace, they need their 1095As. If they have their own home, they need their mortgage insurance, their real estate taxes, DMV registrations, Social Security cards, information about their children, dates of birth, child care.
Okay, receipts? Do you need receipts for things?
We don't need receipts, no. The IRS gives you a general sales tax deduction. If you want to save your receipts and calculate out how much tax you've actually paid, you can do that.
Okay, and then things like, business write-offs or charitable write-offs, do you need things like that?
Yeah, you can bring in the receipts that you get from the Goodwill or anything like that, and we can calculate those out and put those on your tax return as well if you itemize.
Okay, now we still have some time for people to file their taxes. Do you find more people do it on the early side to capitalize on that return, or do they kind of procrastinate, wait till April, middle of April?
The people who want their refunds have already filed their taxes and gotten their refunds, but those who owe usually wait until the middle to the end of April.
The stragglers.
Yes.
Okay, all right. So I want to talk about what it's like, when you sit down with a tax preparer, how long does that usually take? What's the process like?
It can take anywhere from a half an hour to an hour and a half. It just depends on the type of information that you have. If you're a standard 1040 EZ with none of the medical issues, then it can take about a half an hour. If you itemize or you own your own business, it could take upwards of an hour and a half to 2 hours.
Okay, what's the primary difference between using a tax preparer or using online software like TurboTax? It's pretty common. Is there a big difference?
Well, the benefit of using a tax preparer is we know what questions to ask. We know how to answer the questions. If you're using TurboTax, they just ask you simple questions, but if you don't know how to answer the question, you don't answer it correctly, you might not get the benefits you're entitled to.
Is there a big financial difference, you think?
There could be. If you don't answer one portion of earned income credit right, you might not get earned income credit at all. Where if you're sitting down with us and we answer the questions, or we ask the questions of you and we answer the questions for you, then you're going to get the earned income credit that you didn't get filing with TurboTax.
Right. Okay. So one of the biggest changes, big changes this year is the Affordable Care Act. Obviously, people who sign up for health insurance through the marketplace are eligible for some deductions that are new this year. You want to tell us about that?
Well, the Affordable Care Act is the largest change this year. So it is affecting probably thousands of people versus who haven't been affected before. So if you got insurance through the marketplace and you underestimated your income for the year and you got a good portion of your insurance paid for, it's possible that you have to pay that back when you file your taxes.
Oh, wow.
Yeah, it wasn't really specified exactly when you went through the marketplace, but that is one of the biggest issues that we're seeing this year is people are having to pay some of that money back. Or if you just didn't have insurance, then you're paying penalties on not having insurance at all.
And the penalties went way up this year.
Well, no, this is the first year. So it's $95.
Oh, okay, right.
$95 or 1% of your income for 2014. Okay. They'll go up for 2015 and then double for 2016.
But that 1% of your income still, that's usually way more than $95.
Yes. I have only seen one client come through with $95. Everybody else has been upwards of the 1%.
Have you seen a lot of clients come in and be surprised about that penalty?
I haven't seen the clients themselves be surprised, but if they're claiming somebody on their tax return who doesn't have insurance, they don't understand that they have to pay the penalty for the individual who doesn't have insurance.
Right.
So that's where a lot of the shock I'm seeing come from this year.
Yeah, and that can be a good amount of money.
Well, yeah, because it's still 1% of the entire household's income for every person not insured.
Right. Now, on the other side of the coin, for those who purchased insurance through the marketplace and haven't gotten that write-off yet to kind of offset the cost of the insurance, is that something that you're seeing also?
I have not seen it myself, but I've heard stories where they've overestimated their income and they're getting that refund back. So it works both ways. It just depends, but I would highly recommend that you accurately estimate your income if you're going to go through the marketplace for insurance.
Right. That kind of leads into my next question. Is there anything that people can do to be prepared for this? I mean, what would you recommend that people do?
Well, H&R Block does offer the service for free, so they can come in and talk to an H&R Block specialist or a tax specialist, and they can answer the questions for them as to what their estimated income should be when they go to file for the insurance, to make sure that they're as accurately estimating their income as possible. But if you do have any type of an income change throughout the year, you need to let the marketplace know immediately so they can make their changes as well.
Right. It can be confusing, especially if you have a change in job, or you have a promotion, or something changes up in your life.
Correct.
Add on another job. I've personally seen that happen myself and to a lot of people too. So, got to stay on top of it.
Yeah, a lot of people just don't understand that they need to reach back out to the marketplace and let them know that they've had some type of a financial change, whether it's a decrease in income, an increase of income, again, a second job, anything like that. If they're adding somebody to their policy, they need to let the marketplace know so they can accurately recalculate their figures.
A lot of this stuff is so new too. The Affordable Care Act, this is, as you said, the first year that it's taking effect. Next year, if people don't have insurance, that penalty is going to be way higher.
Well, it's $325 per individual, or 2% of your income.
Right.
So
that's a lot of money.
Yes, and it goes
per
up
person.
it goes up in 2016 to even more.
Yeah. Okay. Are there any other new changes, deductions this year that people don't know about or should know about?
There's really not anything new, but one of the biggest errors I'm seeing when people are coming in to file their taxes is with earned income credit and their children. They think that they can only claim up to 3 of their children to get the full amount, or once they turn 17, they're not going to claim them anymore, and that's a big misnomer. It is very important that if you have a child, whether they're going to school, whether they've already turned 17 or whatever, to claim them on your tax return. You still get an exemption credit from them even though you lose a child tax credit.
Oh, wow.
So I've had several people come in, well, my child's already turned 17, so I'm just not going to claim him. Well, don't do that. It doesn't benefit you at all, and it doesn't benefit your child. It would be much more beneficial for you to claim your child even after they turn 17.
Okay, good to know. Now, one thing we hear about every year during tax filing season is identity theft, fraud, people filing for other people's returns or using their personal information. What do you say to clients about protecting their information? Is there something people can do?
Well, actually, H&R Block does offer it's called Tax Identity Shield. It's a new program this year that actually will notify them if the IRS receives a tax return with their Social Security number on it that they've already been filed. It protects them for the 2015 tax year or any future year coming up if they continue to purchase it. But it does provide that protection for them to allow them to know that their Social Security number isn't being used to file taxes.
Is it pretty common to see that? Have you seen that happen?
I have seen it happen in several cases. Some of my own personal clients have actually had that happen to them, and it's a long, hard struggle and process to get through.
Oh my goodness. Is there anything else we can do to kind of guard against that?
There's a couple of different opportunities out there. You just have to kind of look around, but I know just really being careful, checking your credit score and that kind of thing, making sure nobody else is using your Social Security number is probably one of the biggest.
Yeah, I'd definitely be paying close attention. Okay, so what about for those who aren't getting a return this year, who will have to pay taxes? I know that there's a range in there where you pay and you're okay, but I know if you reach too much that you have to pay, you could be penalized, right?
Well, not necessarily. It's when you pay. So if you come into the office and you file your taxes today and it shows that you owe the IRS money, you have until April 15th to get the money into the IRS. So as long as it's postmarked by April 15th, you can get it mailed to the IRS and you won't have any penalties. Anything after April 15th, unless you filed an extension, could cause penalties as well. So if you file an extension for your tax return, you have until October 15th to file, and it helps waive the interest, but it won't necessarily waive the penalties.
Okay, and then that's no matter how big the amount is that you
Correct.
owe. Okay.
It's based, the dollar amount is based, the penalty and the interest is based off of the dollar amount.
So you basically, best to just pay it right away.
Yes.
Okay. What's the best way to do that?
You can do it online. If you have a credit card, they charge lower interest rates via credit card. Mail a check or a money order to the IRS, debit card, anything, any way you would pay a regular bill is the best way to pay.
Okay, sounds good. I know that I've heard before, you know, it's either money that you have throughout the year and then you have to pay the IRS, or it's money that's withheld throughout the year and then you get the bonus at the end. Is there a range that people should shoot for when it comes to filing taxes? An amount that they should shoot for to get back or shoot for to pay?
There isn't really a range. It's really what you're comfortable with throughout the year. So if you want to have a big savings account at the end of the year, have as much money withheld out of your paycheck as you can. So single and zero, you can withhold extra if you would like. But if you're good for the break-even part, usually right about the 10% is a good range to go with. But it does all depend on your income, because you're taxed based off of your income, not based off of a flat amount.
Okay, so no particular range that people should shoot for. It's kind of just whether you want that bonus. And,
Yes.
you know, the beginning
Yeah.
of the
I
year.
always tell everybody to make sure at least 10% of their check is being withheld.
Okay. Okay, we have just about a minute left. Is there anything else? Any other tips that people should know about?
No, just make sure you get your stuff filed, get your extension filed if you're going to file an extension prior to April 15th, so you don't have to worry about the penalties and the interest, making sure that the IRS is aware that you are going to file. You just need some extra time. If you want that refund, come in and get it. The IRS is usually funding within 20 to 21 days right now.
Okay, and it's not delayed, even though they did kind of have a reduction in staffing this year?
Well, normally it's funded within 10 to 14 days, so they're asking for an extra week, so within 21.
Okay, so 3 weeks, that's not
Yeah,
too bad.
no, not too bad at all.
Okay, perfect. Thank you so much for your time, Dina. I
You're
sure
very
appreciate
welcome.
it. Great
Thank you. It
information.
was a pleasure meeting you.
Well, coming up on Face the State, if you've been sneezing and coughing lately, it might be an early round of seasonal allergies. We will speak to an allergist about treatment options right after the break.